Hi everyone, thank you for watching this video. Today I'm going to introduce to you a new iOS app that is going to help you a lot in your work as a property agent in Singapore. And before I start, have your iPad or iPhone ready and go to Apple App Store to search for this app. The name of the app is PropXpert and you need to search the keyword sales calculations. The app icon looks like this. Click the Get to install using your Apple ID password. You can see that my button here is an open button because I have already downloaded this app prior to this demonstration. Okay, once you have downloaded this app, you will be prompted to agree to the terms and conditions before you are allowed to use the app. And in this release, we have provided 3 calculators to you for free. There are another 18 calculators that you can buy via the in-app purchase, and I shall be touching on some of these calculators and explain their functionality in this tutorial. And after you have downloaded the app, hit the agree button to agree with the terms and conditions like I mentioned before. Next, you should be seeing a list of calculators once you have launched the app, and you can hit on the buy button on the far right of every calculators. You can see on the display here that all the calculators has a tick at the end, right hand end, because I have already purchased the bundle. And first on the list is the bundle purchase. If you are interested to get all calculators at a discounted price. And like I mentioned earlier, 3 will be free in this release. Do not worry if you do not know how these calculators work, because you can always hit on how it works, located at the top center of the main page, and you will launch a 13 pages guide on what each calculator is used for and their required inputs. Let me show you. I will click on the how it works, and this is the guidebook that you should be seeing. Okay, in total there are 21 calculators, and it will spell out all the inputs what each calculator is used for, and what are the inputs that the calculators require you to input, and what are the outputs that you are expected to see. Okay, and first I'm going to demonstrate to you the restructuring calculator. Click on the restructuring calculator. This calculator is very useful because it is going to help you convince your client to sell 1 and buy 2 properties. I shall demonstrate to you now. First, enter the cash proceeds that your clients have after selling his or her existing home. I will key in 300,000 just as an example. And next, you need to find out their total CPF balances after sales, including the CPF refunds. Your clients can find out their CPF balances via the CPF website or downloading the CPF app and using their SingPass login. Okay, once you have all this information, you can key in the owner A's total CPF account balance. In this example, I will key in 250,000 for example, and owner B's total CPF account balance, say 200,000. Okay, remember here, we are trying to prove to our clients that if their existing home is sitting on huge profits, they can leverage on that gain to potentially own 2 properties that can help them to create wealth in the long run. And some of these potential clients do not even know that they can actually afford to buy 2 properties. And the good news is you will now be able to use this calculator to show them the figures and their cash commitment after their purchases, and let them know the amount of emergency fund that they can build in an instant So now we shall assume that we are trying to convince a couple to sell their current home and buy two properties, one for own stay and another for investment. Okay, we start with the owner occupying property first. Key in the purchase price, say 1.1 million. Next, LTV or the loan to valuation, say 80%. Next is the cash down payment. I'll put 5% here. And monthly contribution. And we assume that this owner A's income has hit the ceiling. I will key in 1050. And the annual interest rate, I will put 2%. Loan tenure 30 years. Okay. Next, we shall work on the investment property. The inputs required are somewhat similar to the first property. Okay, first, key in the purchase price. For example, this property costs you 650,000. Loan to valuation percentage, in this case, put 70%. Cash down payment 5%. Monthly CPF contribution, presuming that owner B's income also hits the ceiling. Okay, 1050. And because that this second property is for investment, we would expect a rental income. And based on the market rate, conservatively, you should be able to rent the property out at 2005. I'll put 2005. Next is the interest rate. We shall use 2%. Loan tenure 30 years. That's all for the input. Now we can hit the calculate button below. These are all the outputs that the calculator has automatically calculated for you. And there's a lot of outputs, but there are three outputs that interest us most here. First is the total cash balance after the purchase of both properties. And from the calculator, we can generate the cash balance after the purchase of two properties of $212,500. Secondly is the total CPF balance after the purchase of both properties. In this case is $80,800. And lastly, which is also the most important part, is the total cash top-up after negating the passive income. Okay, it's right here. In this case, you can see that it's $334.42. This result will tell you how much your client will need to top up in cash monthly, if any, after owning two properties. And with this calculator and the figures calculated for your client, I think it will be easier for you to convince them that they can in fact afford it when they thought they couldn't. Okay, so much so for this calculator. I will go to another calculator now. Decoupling, I think a lot of people would love to have this calculator. Okay, we need 5 inputs for this calculator. Firstly, enter the new valuated price. You can, this value, this input is talking about the valuation that you estimated for a property that is currently worth. You can use an estimated value based on recent transactional price of similar unit within the same block or project. Okay, in this case I will enter 1.2 million. And outstanding loan, say 400,000. and owner A's CPF usage for the property, say 280,000. Owner B's CPF usage, say 160,000. And last but not least, we need to specify the owner's A's share in percentage. And if this property is purchased under joint tenancy, you should be keying in 50% here. And for the purpose of a better demonstration, I will assume that this couple bought the house under tenancy in common, and owner's age share is 70%. So I will key in 70 here. Now press the calculate button at the bottom now. Please take note that owner A is always referring to the person buying over the shares, and owner B is always the seller that is parting shares to A. Owner A, sorry. And from the result, you can see that the outstanding loan has increased from 400,000 to 568,000 under the total loan. And this is the new outstanding loan once the house ownership has been decoupled. Owner A now holds the mortgage solely. And since owner B has parted shares to owner A, owner B will get back a CPF refund of 160,000 to his or her CPF account, together with a cash return of, what we see here is 80,000. This is how this calculator works. And thank you for watching this video, and I will show you more demonstration of other calculators in the following tutorials. Thank you.